Hi guys, hope you're doing great. In this video, I'd like to walk you through the settings that I'm using for the Phantom Gain Expert Advisor that we've so far been running for a week, and we've gained 2.54%. I'll also be explaining all of the other settings, how they correlate to the performance that you'll be expecting in your account, and potentially what you could change to either reduce your risk or significantly increase it. Please remember that in this case, I definitely recommend backtesting each of the settings that I'm about to show you so that you can gain a better understanding of what to expect depending on how you modify the settings. Otherwise, without much ado, let's just jump in. So this is my live account that I was just showing you on my Myfxbook. I'm using RoboForex as a broker, but in this case, I just wanted to walk you through the different settings and how they affect your performance. So remember, the Expert Advisor, I'm currently only running it on one account, on Euro USD, on the 1 hour time frame. Of course, I have another account which is on MT4, but on that specific account, I'm using significantly way more risks than I am on this account, so I definitely not recommend those settings. However, let's just jump in so that I can walk you through the different settings for the bot, and we'll see how that goes. Before we jump in, for those who would actually prefer a text-based breakdown of the experts settings, I definitely recommend going to SSFx, and then it should be among the links in the featured tools. And once you just click on it, you can either get the expert from Gumroad, or if you just want access to the settings to go through, you can click on the settings button. Once you're on this page, you should be able to read through the basics, the settings, and how each of them would be affecting your account depending on the changes that you make. At the moment, I'll also like to mention that we are currently offering the EA at a significantly reduced price of $199. So if you'd actually like to get it, I definitely recommend using the links down below or going through our website, and you should be able to get it. Otherwise, let's just jump into the settings. So the settings of the Expert Advisor are actually divided into different sections depending on what exactly you'd like to change. So I'll just go sequentially based on how they are organized so as to make it easier for you guys to also follow through. So the first settings, or rather group of settings, are linked to position sizing, and these are the settings that you actually use initially to define the amount of risk that each of the trades that you'll be taking on your account will be using. So by default, actually when you download the bot, by default it uses the fixed lots. In this case, when you're using fixed lots, the lot size that you'll be setting on this next setting is what will be used for each individual trade. However, in some cases, you might find yourself needing your lot size to increase as your balance increases, or your equity increases, or to reduce as that also changes. This essentially ensures that you don't risk too much whenever you have a smaller balance, or you don't risk too little when your balance has already increased. So in that case, we've provided for the percentage of balance and percentage of equity settings. You can use those two settings, and if you set your Expert Advisor to any of the two, you'll have to set this next setting, which is the percentage sizing, either balance or equity. In this case, if I've set 1%, the bot will try to use 1% of your balance or equity, depending on which one you'll set on the first setting, to essentially place a trade on your account. Remember, regardless of what you change on this setting or on these ones, that only affects the first trade that you take. So in this case, if you set a percentage, if you set lot size, fixed lots, and your fixed lot size is 0.01, the first trade, the one where the bot gets the initial signal from the system, that's the trade that will be affected by this lot size. Of course, the bot in the background uses a grid recovery system. So depending on your first risk value, it might affect all the others, now depending on the settings that you'll be setting on the grid settings section. I'll of course be going through that once you get to that section, but that's just information that you might need before you actually proceed. The last setting, which I actually tend to use and I'm using at the moment, is the balance divided by the balance divisor setting. This setting essentially uses your balance as a basis for the risk calculations, and in this case this is how the formula works, or rather the formula has already been explained by this. So assuming right now, as you can see, my balance is $1,000 and $1,025 so, and my balance divisor by value is 10,000. In this case, the risk that the risk that the expert would be placing on the first trade would be equivalent to 0.1025 lots. However, bearing in mind my broker's limitations, whereby it can only go as low as 0.1, basically 2 digits on this end, it will only trade 0.10. That's the initial trade. And if I might go to my history, you can verify that it has taken 2 trades, this one and this one, and in each of them it risked 0.1. Of course, the grid recovery system was not triggered in this case, so we only had 2 trades and each of them took 0.1 lots. Having done the position sizing section, let's move on to the trade filters. These are actually pretty self-explanatory. They just help you filter out certain trades that you don't want to trade depending on your backtesting, which I definitely recommend you to do. The settings that you can see on my end are the default settings. In this case, we have time-based settings where you define when the bot will be trading. For these settings, we are currently using my server default time, which is UTC +2. In this case, this is the default. Of course, if your broker server time is different, I definitely recommend modifying this to match up with that. So in the first setting, we actually define the server start hour. So for instance, in this case, we are starting at 2 hours past midnight, and the minute is 0. So exactly at 2 hours past midnight. After that, when the bot essentially is done looking out for signals, is at 21 hours and 0 minutes. So that's how you define them. So while the bot will not check for signals outside of these hours, it will definitely manage trades. So these hours essentially only affect when the bot checks for trades, not when it actually manages trades. So if it has a trade open already, it will keep managing the trade even outside these hours. However, if it doesn't have any trade, it will not be taking any trade outside these hours. The next setting is the maximum active signals per side. This setting essentially affects how the bot will behave depending on whether it has a trade already and it gets another signal. However, it's only triggered if the bot is currently in recovery mode. For example, assuming it has already executed a trade at this level and it was a buy trade, and the market has gone against you and the bot is essentially in recovery mode. Once it has entered into recovery mode, which is essentially it has activated the grid, for instance, it has already taken another trade, if and when it then finds another signal, let's say at this point or even here, and you have set this value to, let's say, 2, it can take an additional buy trade. However, by default, it only takes the first signal and assumes all the other signals until this trade has been closed. This is of course to limit risk, since whenever you're using a grid, once you start stacking up trades, it can get pretty risky pretty fast. So we essentially limit the signals to just a single signal per time. Of course, you can perform other backtests and optimizations to find other settings that will work better for you, and for that you don't actually need the main expert advisor. You can just use the demo expert advisor that you can find on our website. Next, we have the allowed directions setting. In this case, this setting allows you to select whether you only want to take long biased trades, shorts, or both. In my case, since I'm using a hedging account, which you can get on most brokers, I have allowed it to trade in both directions. However, if at all you're using a netting account, or your broker only allows or your broker does not allow hedging, I definitely recommend selecting one direction for one direction which you want to allow the bot to trade. And in this case, you can be looking at the higher time frame bias. So for instance, if the market is mostly bullish, you can allow it to only trade longs, and once it switches, you can change it to shorts, and it will gradually adapt to the settings that you've set. Of course, if you have an existing trade as you're changing these settings, the bot will continue to manage those trades. The next section that you have is the grid settings section. It's very important for you guys to understand how this section works, since it essentially affects how the bot will manage your trades if and when you get into a drawdown. The maximum recovery trades is a setting related to the maximum number of trades the grid would add to your initial entry to essentially significantly reduce your drawdown period and allow you to recover any amount that you would have lost as your initial trade is in a loss. So in this case, assuming you had performed an initial buy trade, let's say of 0.1 lots, and it has gone against you. By default, we have a setting of 50 pips. So if the market has gone against you 50 pips, the bot will add an additional buy trade, and depending on the factor that you will have set, I'll show you the factor trade. It will either trade 0.1 or 0.2, or depending on the multiplier that you'll have set at this point. This essentially implies that your average price, the average price between the two trades, will have significantly reduced to somewhere around here. And if the market now has a slight pullback, it should be able to take you out. That's essentially how the grid, the maximum recovery trades work. So in this case, if you've set a maximum recovery trade of 3, it will take your initial trade and 3 additional trades. Now, if the market goes against you for an additional distance based on your grid settings, for instance, when you are buying, it will take 3 additional trades in addition to your first trade. So that's what the number refers to. It does not refer to the combination of your trades, but rather only the recovery trades. I hope that explanation was good enough. If not, definitely send us an email via our support email, and we'll definitely reply to you and help you go through the settings. Otherwise, the next setting is related to the grid step. That setting at the moment is defined in points. So in Euro USD, 500 points essentially refers to 50 pips. In this case, you're using points to ensure that no mistakes are made during the calculations, since every single currency pair or symbol in the market essentially uses points, but pips might change depending on the broker or depending on how the current symbol that you're trading is set up on the server side. So in this case, 500 points is synonymous to 50 pips in Euro USD, and that's the default. This essentially implies that after your first trade, the next one would be added 50 pips, or rather 500 points away from the first trade. So that's just what the setting refers to. That setting works in tandem with the grow your grade step by factor, and this setting essentially controls how fast we modify the grid step points, and there's actually a formula behind that. In this case, we have set it to 1.5, but I'd like to walk you through the different variations so that you can get a better understanding of how that works. So by default, we have a step of 500 points. So you can just assume in Euro USD, you can assume that is 50 pips. So if you've set the factor, the growth factor, to 1, this implies that once you've had your initial trade, the next one would be 50 pips away, and then if the market goes further, it would also be 50 pips away, and it continues like that up to the maximum number of grid trades or recovery trades that you've allowed. So it uses 50 pips on every step. However, you might find yourself wanting to grow that amount in such a way that places your trades further away. By default, we have set this to 1.5, and I want to explain how that affects your trade. So by default the formula is for the next price is the last price plus or minus, depending on whether we are buying or selling, the grid step multiplied by the power of the factor and the current recovery trade number minus 1. I know it seems complex, but it really isn't. Let me just walk you through. So if we assume this part and first deal with this one implies that if we have a grid step of 50 pips, we multiply that for the first trade with 1.5, our factor, math.power, essentially a factor divided by, it's the first recovery trade minus 1. So we do this 50 times 1.5 raised to the power of 0, this one, which will just give us 50 if you remember your math. For the second trade, it would be 50 times 1.5 raised to the power of 2 minus 1, it is 1. So if I can just, in this case, this will come to about 112. So let me walk you through how that will look like. So if we have our first trade here, the one where the market essentially gave the bot a trigger and the bot executed it, and it goes against you for 50 pips. This one, we essentially take our first recovery trade. However, the next one, this one, will be 112 pips away. Essentially, this formula is intended to ensure that each subsequent trade will be further and further away, since based on how currency pairs work, if the market is gradually trending down, there's no point for you to load up on a lot of trades in the buy side, since that significantly increases your risk. And if the market is very volatile, this setting essentially saves you and ensures that it tries to get you in at a very low price, so that ultimately if the market now tries to reverse, you got in at around here as opposed to here. Of course, I definitely recommend you to do a lot more backtests to kind of get a feel for how this works. But so far, we found a good balance for distance is about whenever you're using a factor of 1.5. Of course, a factor of 1 also works pretty well, and I definitely recommend you running a backtest of that. But in certain situations, it tends to load you up on trades pretty quickly whenever the market is trading against you, and essentially reduces the likelihood of you surviving significantly highly volatile situations without increasing the maximum number of trades that you want to take in a specific grid. So remember, these two settings essentially work in tandem. So you'd find if you have a lower factor, let's say 1, you will need more recovery trades, and you could also need a larger balance to kind of cover up the equity. However, if you have a higher factor of 1.5, you need less recovery trades since it trades less often, and you also need a smaller balance, or rather you can survive with a smaller balance. So these essentially work in tandem. If that explanation wasn't good enough, definitely email us and I'll walk you through the different ways that specific factor would affect your performance. Otherwise, for now, let's move to the next section, which is the recovery trade multiplier. In this case, that just affects how the volume that was calculated here is modified for each subsequent trade. So, as a quick explainer, if you can remember, on my account, the first trade is 0.1 lots. This is the signal trade. If the market goes against me for 50 pips, as you saw, or 500 points, bearing in mind my setting, my multiplier is 2, the next trade would be 0.2 lots. If it then goes away from my trade by 112 points, 1120 points, which is essentially 112 pips, it will take another trade of 0.4 lots, since it's multiplying the previous trade by this factor. That's essentially what this recovery trade multiplier does. So for every subsequent trade, it multiplies the previous trade's volume by this factor and then rounds it up depending on the broker's step value. So for certain brokers, they only allow 0.1 to 0.2 increments by 0.1, while others allow 0.01. Now, depending on your broker, this value, once it's multiplied by your initial volume, it will essentially keep using that value to multiply and then rounding down. Next, the next section is related to take profit. So for the take profit, you can define it in points, similar to the grid step points. And in this case, by default, it's 120 points, or rather 12 pips. It's pretty direct. So essentially, whenever you've set your profit at 12 pips or 120 points, when the market goes into profit by 12 pips, it will close your trades. Next, it's essentially a question whether the bot should account for costs. Costs in this case refers to the swap's delta. So in certain situations, you might find that the bot might be in recovery mode for too long. And during the time where it has been in recovery, so for instance, you had taken a long trade and then the market goes against you and it starts adding trades, and let's assume it takes 2 weeks. In these 2 weeks, you will have accumulated significant swap fees if your broker uses swap fees, and that can significantly affect your account, since after every drawdown in equity, your balance also goes down. In this case, this setting essentially was added to ensure that the bot not only captures the 12 pips, that's why this is in the take profit section, not only captures the 12 pips, but also not only covers the 12 pips, but it also accounts for the swap fees that you accumulated during that period. So it takes the swap fees, adds them to the required profit. So you'd find that while your equity will head lower, it will quickly recover and then adapt to the point where it is above the initial balance. So it captures the 12 pips plus your swap fees. So it essentially accounts for costs, as opposed to letting your cost gradually wear down the account. Of course, this could also potentially work against you, bearing in mind you might be waiting to account for the additional swap fees, but then the market has already hit a 12 pip average profit, and you end up missing out if the market then continues in the opposite direction. So use this carefully, and I definitely recommend doing a backtest to verify whether how the market performs works for you. Remember, the default settings that I'm using here are the settings that are used in one of the backtests that I shared in the previous video, and actually it's also the setting that I used on this backtest. So for the past 10 years, between 2015 to 2025, the bot made 78%, had a 78% win rate, with a 5.22% balance on drawdown, and that's essentially the setting that I'm referring to in this case. The setting that made that happen is this one, since at the end of the day, if I can open up this report, let me show you something. If you can look at this report, these instances where the balance seems to spike up, like once it has gone down for a bit, it spikes up immediately. Those are the areas where the market was in a significant drawdown and required and had to essentially use the start setting to make back the swap fees. In a future video, I could show you how the balance line is affected if you actually turn that off, but I'd also definitely recommend you doing your own backtests with your own data so that you can see how the performance is affected. Next, we have the risk management settings. In this case, whenever we are trying to manage risk, these settings essentially allow you to limit the amount of risk that you will be taking on. And specifically for the first option, it allows you to control whether you'll be using the grid, use a stop loss, or none. Whenever you're using a grid, the settings will work as I have previously explained, in which case it will add to your losing positions and essentially allow you to recover your drawdown quicker. However, you can also turn this off and use a stop loss. Whenever you're using a fixed hard stop loss, it will close your trades whenever it goes against you based on the setting that you've set on the grid step points. So it will use this as your stop loss. So it will close your trades whenever you hit 50, whenever the market goes against you by 50 pips, in this case 500 points, and it will close it when it goes into profit by 12 pips. The next setting is none. None is a bit of a doozy, since it essentially turns off your stop loss and only closes your trades once they go into profit. In this case, while the setting is available for you to use, I definitely not recommend it, since it's a bit risky and it's much like letting your balance or letting your trade go until such a point it comes back into profit. In that case, in the future, we'd be adding a hedging solution, which essentially hedges your trades instead of just letting them go, so that you can close them once they go into profit, and you can continuously take money out of the market depending on the trim the hedge approach. That's a future update, since something that I did not mention is that we are continuously developing the bot, making updates to it, and ensuring that we can improve it over time, so that it can keep adapting to how the market conditions are changing. Otherwise, the next setting is the maximum loss, which is the maximum loss per grid. So if a specific grid, so assuming you have your setting for the maximum active signals to 1, and this one is set to both longs and shorts, if you have a buy grid that's currently in loss and you have sell trades, it will keep trading the sell trades and the buy trades, taking profit. But if one of the grids try to essentially gets to a point where it wants to blow your accounts, you can limit that loss by essentially setting this value. In this case, it's set by 100. It's set to 100, which implies that it will let your balance lose 100%. I definitely recommend changing this based on your preferences. In this case, I'm risking an amount that I'm comfortable to lose, but you can limit this to 50%. So if it loses 50% of your account, or 20%, or 10%, it will close out that grid and start out a new, and wait for the market to give it a new signal, and then continue from there. So I definitely recommend you modifying this, but do your backtest first to find the perfect balance between performance and risk management. The next setting is related to using money instead. So in this case, you're using a percentage of the balance, but whenever you change this, you can change this to true, and it essentially uses the monetary value that you'll set here, which is based in your account currency. So in this case, if I wanted to limit my losses to, let's say, $200, since I currently have $1,000 in this account, if I limit it to $200, if any specific grid has a loss of $200 or above, it will immediately close out that entire grid and wait for a new signal from the market. Remember, this is not all the trades, but rather a specific grid. Lastly, we have miscellaneous settings, in which case we just use these settings. The bot essentially uses these settings to group out your trades. So for the magic number, it sets this magic number to all the trades that it takes, which essentially allows you to filter out trades taken by the bot or other systems that you might be trading. The same applies to the comments. If I actually go to, since I'm actually done with the settings, if I go to this point and maybe I display the comments, you can see it uses that comment. So, and magic number, you can see those are the settings that it uses in each case. Lastly, something I should mention, whenever you are trying to set up the bot, remember to make sure that you've turned on algo trading, and then you have allowed DLL imports. You'll also need to allow them in your terminal. You go to the experts tab, you allow algorithmic trading, and then you allow DLL imports. For all the other settings, you can customize them based on your preferences. Otherwise, that's it for the settings related to the bot. I definitely recommend you going to our website, downloading this report and checking it out. We also have this one, which is the default settings for the fixed lot size, and these are the results that the bot brought about. It had a drawdown of 2.21% on the balance, but equity was at 10%, but it made a total net profit of $1,813, bearing in mind it started out with a balance of $1,000. This is pretty good, and on average, based on the second settings, it makes around 2% or above in a month. So bearing in mind that was the target I was working with, this was great for me. Otherwise, for the time being, I definitely recommend you checking out the links that I'll be placing down in the description. Remember that the bot is currently on offer, and yeah, you can get it on Gumroad. So on Gumroad, you'll actually gain access to, you can either get the demo version or you get the full version. And in cases where you want additional licenses, so the bot at the moment, and this is actually for a limited time, it comes with 5 licenses included. This will essentially be reducing once we've built up a reputation on Myfxbook, but for now we're just limiting it to 5 licenses, and later on, if you actually want additional licenses, you can also access them from the same page. Remember, you can get the demo version from there, and once you get it, you just download it and backtest it. Otherwise, thank you so much for watching. For now, that's it for today, and I'm wishing you a great trading day ahead.